The COVID-induced financial volatility is here for the foreseeable future. In most frontier markets, shallow money markets and deep deficits were pre-existing conditions exacerbated by the pandemic. The economic fallout in 2021, for example on credit portfolios, means that banks must remain alert, continually managing risks to build stability and trust among their clients and in the economy. This will be impossible without active participation in well-functioning money markets, underscoring yet again their cornerstone role in the financial system. To further investigate the economic impact, we asked our network what they felt was the most relevant impact of COVID-19 on money and bond markets. Ron Bolander, Policy Advisor, Foreign Commonwealth and Development Office. The impact of the COVID pandemic has in no uncertain terms reinforced the benefits of governments and firms having access to deep capital and money markets to overcome financing pressures. Sadly, it is those countries that have felt the economic shock of COVID the hardest, particularly across the developing world, where these markets remain underdeveloped. If we are serious about learning the economic lessons of the pandemic, we need to take a look at how we ensure financial markets are a solution, and not a burden, towards the path of economic recovery. African Bond Market Specialist and member of Finance Africa think tank. In response to the pandemic emergency and in the face of declining income, most of the African economies increased their demand for resources on the auction local bond markets. The COVID-19 effect amplified the momentum in 2020 with issuance of bonds with longer maturities. FMO representative. The COVID-19 crisis is revealing more than ever the relevance of local bond and money markets development. Well-functioning money markets ensure greater diversity, efficiency and stability in the financial system. This helps significantly in reducing risks and absorbing shocks such as capital outflows and FX volatility, improving financial and monetary policy operations and not in the least contributing to continued availability and access to finance for the private sector. The magnitude of the COVID-19 crisis shows how important well-functioning financial systems are, not only within a country, but across regions as well. FMO welcomes initiatives that contribute to the speeding up of bond and money markets development. James Dorry, Managing Director, Lions Head. As an investor in domestic African corporate bond markets, we saw deal activity slow down among our target, smaller, issuers. On a more positive note, mass credit distresses, as yet, not happening. Strong monetary easing in Nigeria made it possible for blue-chip companies to issue bonds and commercial paper at lower rates. The West African regional market appeared largely unaffected in terms of pricing, while East African corporate bond markets remain largely stunted. But in general, our big challenge as an offshore investor has been to justify our investments on a hedged or open currency basis given that local rates have declined and diverged from offshore NDFs.